A dictator walks into a bank. Not a back-alley money changer. Not a criminal front. A legitimate, regulated, internationally recognized bank with marble floors, a compliance department, and a legal team billing $400 an hour. He deposits $200 million. The bank knows where it came from. Their own internal reports say so. Their compliance officers flagged it. Their analysts wrote memos about it. And then, the transaction cleared. Because the dictator wasn't just a customer. He was their most profitable customer. And in the world of international banking, profit doesn't just talk. Profit decides what is legal, what gets investigated, and what quietly disappears into the system never to be questioned again. This isn't one story. This isn't one bank. This isn't one dictator. This is a pattern. Documented. Repeated. Global. The biggest banks in the world, the ones with your savings, your mortgage, your pension, have been caught, fined, and proven to have knowingly processed money for some of history's most brutal dictators, deadliest cartels, and most destructive regimes. And every single time they paid the fine, admitted no wrongdoing, and went right back to business. Because here is the truth nobody in finance wants to say out loud. The banking system doesn't just enable dictators. It needs them. Dictators move money in volumes that legitimate customers never will. They don't negotiate fees. They don't ask questions. And they never ever leave. Welcome to the investigation. Follow the money. Because the money always leads back to the same marble floors. Before we go any further, subscribe right now. What you are about to hear is documented. Every bank is real. Every transaction happened. Every fine was paid. And every bank went back to doing exactly what got them fined in the first place. If you want the financial truth they don't teach in school, the investigations they bury on page 47 of a Senate report, and the names they hope you never connect, you need to be here. Hit subscribe. Hit the like button. Drop a comment if you already knew banks did this. Drop a comment if you didn't. Either way, by the end of this video you will never look at your bank the same way again. Let's follow the money. Let's go. Let's establish something clearly before we go further. We are not talking about small, obscure, offshore banks operating in the shadows. We are talking about the biggest names in global finance. Banks that processed billions in dirty money for dictators while simultaneously running television commercials about trust, integrity, and community values. Banks with compliance departments, legal teams, and entire divisions dedicated to, quote, preventing financial crime. Banks that filed suspicious activity reports, flagged transactions internally, wrote warning memos, and then processed the transactions anyway. Every major bank in the world operates under what is called AML compliance. Anti-money laundering. The rules are clear. Know your customer. Banks must verify who their clients are and where their money comes from. Suspicious activity reports. If a transaction looks wrong, banks must file a report with regulators. Enhanced due diligence. Politically exposed persons, meaning politicians, government officials, and their families, require extra scrutiny before being accepted as clients. Freeze and report. If money appears to be from illegal sources, banks are legally required to freeze it and report it. The rules exist. The compliance departments exist. The reports get filed. And then the money clears anyway. Here is why. The fine for processing dirty money is typically a percentage of the transaction. Sometimes 1%. Sometimes 5%. Rarely more than 10%. Which means if a bank processes $1 billion in dirty money and gets caught, the fine might be $50 million. The profit on that transaction? $300 million. You do the math. The fine is not a punishment. The fine is a business expense. It is the cost of doing business with dictators, and it is already factored into the profit calculation before the transaction clears. This is not speculation. This is documented in court filings, Senate investigations, and the bank's own internal communications. The system isn't broken. It's working exactly as the banks designed it to work. Let's follow the money. HSBC. One of the largest banks in the world. Headquartered in London. Operating in 64 countries. Trusted by millions of ordinary customers. Between 2000 and 2010, HSBC's Mexican subsidiary processed approximately $881 million for the Sinaloa Cartel. The same cartel responsible for tens of thousands of murders. The same cartel that was flooding American streets with cocaine and heroin. How did it work? Cartel operatives designed special boxes that fit perfectly through the teller windows of HSBC Mexico branches. The boxes were packed with cash. The cash was deposited. No questions were asked. HSBC's own compliance officers flagged the accounts. Internal reports identified the suspicious activity. The warnings went up the chain. And the transactions kept clearing. In 2012, the U.S. Department of Justice announced a $1.9 billion settlement with HSBC. At the time, it was the largest bank fine in history. HSBC admitted to processing the cartel money. They paid the fine. No individual banker went to prison. Not one. The Assistant Attorney General at the time said, and this is a direct quote from court documents, HSBC allowed itself to be used as a conduit for drug money. Allowed itself. Those two words tell you everything about how the system works. It wasn't a hack. It wasn't a sophisticated fraud that fooled the bank. The bank allowed it. Because the bank profited from it. Deutsche Bank. Germany's largest bank. One of the most powerful financial institutions in Europe. Between 2011 and 2015, Deutsche Bank processed approximately $10 billion in suspicious transactions from Russia in what investigators called the global laundromat scheme. Here is how the scheme worked. A Russian client would take out a loan from a Deutsche Bank subsidiary in Moscow. The loan would be guaranteed by a related party in a country with weak banking oversight, typically Moldova or Estonia. The loan would immediately default. The guarantor would pay the debt. In doing so, dirty Russian money became a legitimate debt payment processed through European banking infrastructure. The money was now clean. $10 billion clean through one bank in 4 years. Deutsche Bank's compliance department flagged hundreds of these transactions. Internal reports identified the pattern as suspicious. The bank's own anti-money laundering system marked the accounts for review. The transactions cleared anyway. In 2017, Deutsche Bank was fined $630 million by US and UK regulators. They admitted their internal controls had failed. No individual banker went to prison. But here is the detail that tells you everything. Deutsche Bank had processed similar suspicious transactions in the same period for clients linked to Russian oligarchs close to the Kremlin. The same Kremlin that was actively funding destabilization campaigns across Europe and the United States. The bank that was fined for laundering Russian money was simultaneously the bank managing the financial affairs of people connected to the regime generating that money. Standard Chartered Bank. Headquartered in London. Operating in 59 countries across Asia, Africa, and the Middle East. Between 2000 and 2010, Standard Chartered processed approximately $250 billion in transactions connected to Iran, in direct violation of U.S. sanctions. $250 billion. For a sanctioned regime. The scheme was remarkably simple. Iranian clients would send wire transfers through Standard Chartered's New York operations. The bank's own system would flag Iranian origin details. Bank employees would manually strip out the identifying information before the transaction reached U.S. regulators. This wasn't an accident. This wasn't a system failure. Bank employees were manually removing evidence of sanctions violations. Transaction by transaction. When a Standard Chartered executive in New York raised concerns about the practice, he received an email from a London colleague that U.S. investigators later described as one of the most damning pieces of evidence in banking history. The email said, "You Americans, you think you can impose your rules on the rest of the world. You are naive. K the money." In 2012, Standard Chartered paid $340 million to New York regulators. In 2019, they paid $1.1 billion in a combined settlement with US and UK authorities. No individual banker went to prison. Wachovia Bank. At the time, one of the largest banks in the United States. Later acquired by Wells Fargo. Between 2004 and 2007, Wachovia processed approximately $378 billion in transactions through Mexican currency exchange houses with almost zero anti-money laundering controls applied. $378 billion. To put that number in perspective, it represented a significant portion of Mexico's entire GDP at the time. Investigators found that drug trafficking organizations used Wachovia accounts to purchase aircraft that were later caught carrying tons of cocaine. The money trail was direct, documented, undeniable. Wachovia's own anti-money laundering officer, a man named Martin Woods, repeatedly raised concerns internally. He filed reports. He escalated warnings. He pushed the bank to take action. The bank ignored him. Then they sidelined him. Then they effectively forced him out. Wachovia paid a $160 million fine in 2010. No individual banker went to prison. Martin Woods, the compliance officer who tried to stop it, later said in an interview, "The banks didn't just fail to prevent money laundering. They actively made it easier. The cartel cases are disturbing enough. But cartels at least try to hide what they are. Dictators are different. Dictators are known. Their regimes are documented. Their human rights records are public. Their political status as heads of state means they are, by definition, politically exposed persons requiring enhanced due diligence. And yet, Teodoro Obiang Nguema Mbasogo has ruled Equatorial Guinea since 1979. His regime has been documented by human rights organizations as one of the most brutal in Africa. His son, Teodorin Obiang, served as agriculture minister while the country's farmers starved. Riggs Bank, based in Washington, D.C., managed accounts for the Equatorial Guinea government containing between $400 million and $500 million. The money flowed in from oil companies operating in Equatorial Guinea. It flowed directly into accounts controlled by Obiang's family. Accounts at Riggs Bank. In Washington, D.C. Riggs Bank filed almost no suspicious activity reports on these accounts despite clear evidence of corrupt activity. A 2004 U.S. Senate investigation found that Riggs had, quote, turned a blind eye to evidence suggesting the bank was being used for corrupt purposes. Riggs paid $25 million in fines and subsequently collapsed. The Obiang family kept the money. Here is where the story becomes almost impossible to believe. After Riggs collapsed, Teodorin Obiang didn't struggle to find a new bank. Despite being publicly identified as a corrupt government official, despite being under investigation by U.S. authorities, despite his country's documented human rights abuses, multiple international banks opened accounts for him. He purchased a $30 million mansion in Malibu, a $50 million private jet, a $76 million yacht. These purchases were processed through international banks and financial institutions that all had access to the same public information about who Teodorin Obiang was and where his money came from. In 2014, the U.S. Department of Justice filed a civil forfeiture action to seize his American assets. The court documents read like a case study in how international banking enables kleptocracy. Every single asset was purchased through financial institutions. Every single institution had legal obligations to verify the source of funds. Almost none of them did. When Muammar Gaddafi was the leader of Libya, his regime was internationally isolated for decades due to terrorism sponsorship and human rights abuses. Then, in 2003, Libya renounced weapons of mass destruction. Within months, Western governments normalized relations. And within months of that, Western banks rushed to establish relationships with the Libyan Sovereign Wealth Fund, the Libyan Investment Authority, which controlled approximately $65 billion in assets. Goldman Sachs invested $1.3 billion of Libyan money. The investments lost almost all their value. In what investigators later called deeply troubling, Goldman Sachs employees allegedly provided Libyan officials with gifts and other inducements to maintain the banking relationship. Goldman Sachs denied wrongdoing. The case was settled confidentially. Société Générale, the French banking giant, paid $1.3 billion in 2018 to resolve U.S. investigations into corrupt payments connected to the same Libyan fund. In both cases, the Libyan money was managed by a regime that would go on to use that wealth to fund internal repression and maintain a dictatorship. The banks knew who their client was. They competed for his business anyway. By now you're probably asking the same question that every investigative journalist, every Senate investigator, and every compliance officer who later became a whistleblower has asked. Why do they keep doing it? The fines are real. The reputational damage is real. The Senate hearings are real. And yet the same banks get caught again and again. We established this earlier, but let's go deeper. The fine for money laundering is almost never proportional to the profit. HSBC processed $881 million for the Sinaloa Cartel and paid $1.9 billion in fines. That sounds punitive until you realize that fine covered a decade of processing. In that decade, HSBC's total revenue was in the hundreds of billions of dollars. The fine was a fraction of their total earnings. More importantly, the fine was not linked to the specific profit on the specific transactions. The bank kept the profit. The fine came from general revenue. Which means, the people who made money from the dirty transactions kept their bonuses. The shareholders paid the fine. Until fines are confiscatory, meaning they take back all the profit plus penalties, the math will always work in favor of processing dirty money. This is the most important reason and the most damning indictment of the system. In every case we discussed, and in dozens of other documented cases of major banks laundering money for dictators and cartels, not one senior banker has gone to prison in the United States. Not one. There have been prosecutions of low-level employees. There have been prosecutions of foreign nationals who used the banks. But the executives who made the decisions, who saw the compliance reports, who signed off on the strategies that allowed dirty money to flow, free. Compare this to what happens to an ordinary person who receives stolen property without knowing it was stolen. They can face prosecution. Their assets can be seized. Their life can be destroyed. The banker who knowingly processes $900 million for a drug cartel? Fine paid. Deferred prosecution agreement signed. Back to work Monday. The people who regulate banks used to work for banks. The people who prosecute banks know they will go work for banks after they leave government. The people who write banking regulations attend the same conferences, the same dinners, and the same charity galas as the people they are supposed to regulate. When the U.S. Department of Justice negotiated the HSBC settlement, they specifically decided not to prosecute HSBC because, according to internal DOJ documents later revealed, they were concerned that prosecuting HSBC might destabilize the global financial system. Too big to prosecute. The bank that processed cartel money was so large and so systemically important that prosecuting it was considered more dangerous than letting it continue to operate. This is the uncomfortable truth that nobody in government wants to say. Dirty money is money. When it enters the banking system, it gets invested. It buys real estate. It funds businesses. It creates jobs. It generates tax revenue. The economist Friedrich Schneider estimated that the global shadow economy, money that includes criminal proceeds, represents between 15 and 20% of global GDP. If you suddenly removed all dirty money from the global financial system, the economic shock would be catastrophic. This is not an excuse. This is an explanation for why governments that claim to fight money laundering consistently do so in ways that are designed to look effective without actually being effective. The system needs dirty money. And the banks that process it know it. Banks don't do this alone. There is an entire ecosystem of professionals whose business model depends on helping dirty money move through the system. In most countries, lawyers have attorney-client privilege. Communications with a lawyer are confidential. In most countries, lawyers are exempt from anti-money laundering reporting requirements that apply to banks. Which means, a lawyer can help structure a transaction that moves dirty money without ever being required to report it. Shell company creation. Property transfers. Trust structures. Estate planning. All legal services. All potentially used to move dirty money. All largely exempt from the regulations that apply to banks. The United States did not require real estate agents to file anti-money laundering reports until relatively recently, and even now the requirements are limited. In major cities like New York, London, and Miami, cash purchases of luxury real estate have been identified by investigators as one of the primary methods by which dirty money enters the clean economy. A dictator cannot walk into a bank and deposit $200 million without triggering compliance reviews. But that same dictator can buy 5 apartment buildings in Manhattan through a series of shell companies and the transaction will clear with minimal scrutiny. The Big Four accounting firms audit the financial statements of companies across the world, including companies in countries with authoritarian governments. Their audits provide legitimacy. Their clean sign-offs on financial statements are used to access international capital markets. Multiple investigations have found that accounting firms have signed off on financial statements for companies that were later found to be involved in money laundering or corruption. In almost every case, the firm paid a fine. The partners kept their bonuses, and the firm's reputation recovered within 18 months. So let's answer the question we started with. Why does a legitimate, regulated, internationally recognized bank process money for drug cartels and dictators when it knows exactly what it is doing? Because the system was not designed to stop them. The fines are not punitive. They are licensing fees. The compliance departments are not prevention. They are documentation that creates legal cover. The suspicious activity reports are not investigations. They are paper trails that demonstrate the bank technically followed the rules while practically ignoring them. The architecture of the global banking system was built by the same institutions that profit from it. The regulations were written with input from the same lobbyists who work for the banks. The enforcement is carried out by people who will work for those same banks after they leave government. HSBC processed cartel money. They paid the fine. No one went to prison. Deutsche Bank processed Russian oligarch money. They paid the fine. No one went to prison. Standard Chartered processed Iranian money in violation of sanctions. They paid the fine. No one went to prison. Wachovia processed drug trafficking proceeds. They paid the fine. No one went to prison. The pattern is not a failure of the system. The pattern is the system. And until the consequences for processing dirty money outweigh the profits from processing dirty money, nothing will change. Not because bankers are uniquely evil, but because the system rewards them for doing exactly what they are doing. The dictator walked into the bank. The transaction cleared. And somewhere in a marble lobby, a bonus was calculated. That is the financial system that runs your world. The question isn't whether you trust your bank. The question is whether your bank has any reason to deserve that trust. Follow the money. The answer is always in the transactions. Here is what you do right now. First, subscribe immediately. We are building the most comprehensive investigation into how money and power actually work on this platform. The Federal Reserve, the IMF, sovereign wealth funds, and the offshore system that connects all of them. You need to be here for what comes next. Second, like this video. YouTube's algorithm decides whether this reaches 1,000 people or 1 million people based on engagement in the first hour. Your like matters more than you think. Third, comment below with this. Which bank do you think is most complicit right now? Not historically. Right now. The conversation in the comments will be more revealing than most news articles you'll read this week. I read every single comment and I respond to the best ones. Fourth, share this video. Send it to someone who still thinks the banking system is just neutral infrastructure. Send it to someone studying finance or law or political science. Send it to anyone who thinks white-collar crime is victimless. Because it is not victimless. Every dollar a dictator launders through a complicit bank is a dollar stolen from the people that dictator was supposed to serve. Every peso a cartel cleans through a marble-floored bank is funded by violence, addiction, and death. The victims are real. The system that enables it is real. And the banks counting their profits are very, very real. Next video, the offshore system. The Cayman Islands, Switzerland, and Luxembourg didn't become financial centers by accident. They were designed, lobbied for, and maintained specifically to give dirty money a place to hide in plain sight. We are going to follow the money all the way to the source. Subscribe. You will not want to miss it. Follow the money. Question everything. The truth is always in the transactions. See you in the next investigation.